Okay, guys, welcome back. Now, the thing is this, why do we need to do a stop here? It's because we are basically putting the videos in this way. Market talk is one, then followed by revision is one. So people can use it for their own revision without going through the whole process of watching the whole video. And also because you notice nowadays these videos are all have this English subtitle, Chinese subtitle. Yeah, it's done by all our team members who are diligently doing it every single day for all of you. All right. So because we want you to know that we want you to succeed in your trading, so we purposely do that. Now, some of you say cannot find this video. It's actually available on the Facebook. I mean, it's a community site. You can find them. If you don't know where is it, you can get Susan or Disha to assist you, all right, on the site, yeah? Okay, so we're going to go into right now the revision for today. Let's go. Now, revision means that what you see yesterday and what you can do, okay? So revision wise itself, some of you actually commented to me that y'all want it a bit longer because you can learn more stuff. Okay, I'll do a bit longer today just for you to learn, okay? All right, so this is the Dow Jones as of yesterday. Now, one thing to note, I told you before, right? When the KSI is red in color, usually I'll do one simple thing. What I'll do is that if the market goes below OP, definitely I'll sell a bit more. And also additionally itself, right, when the market go to KTR1, KTR2, KTR3 example, when the KSI day chart is red, I will look for turning points to do a swing trade downwards. Okay, when you follow OP, it's called a follow through trade. When you do a sell at the high, it's called a swing trade. The difference is swing trade, you carry risk because high can go higher. All right, follow through is better because you know where it's going to head towards. Okay, so I explain to you later on when I see the 5-minute chart. Yeah, that's one. Number two is that there's something you must understand. Why we have the MA30 is to guide you in short term. If the MA30 is above you, where the current price is now at this current level, and the MA30 is on top of you, right? Usually means the market overall at the moment now sentiment is actually weak. Okay, so that's why you can see overall the last few days, although the market did not really go down much, but it's still weak relatively. Okay, got it? Now, of course, you say then, but the MA200, then it's very strong. What? Now, MA200, I mean, compared to MA200 compared to MA30, one is 30, one is 200. Obviously, MA200 is for long term. So, which means that the moment now, long term, the Dow is still positive. Short term, there is some selling pressure. Understand that? If you understand this, press number 8 right now. Then of course, someone should say, Cal, then what? Very conflicting, very conflicting. It's not conflicting. It's just telling you itself that a particular country, long-term wise, is going to be very well. But then intermediately, there may be some profit taking, there might be some recession, but the on-tree is overall well. Unless everything goes bad, then of course, then the country's over. Okay. All right, all clear? Okay, let's go. Okay, so this is what happened as of yesterday. The Dow Jones was just sideways all the way. Now, what is the reason? Because very clearly you can see that the pivot one is actually at the bottom. The OP is on top. Now, do note our pivot and our OP is really got nothing to do with each other, which means that the pivot calculates by itself and then it block the chart into the chart. So it does not mean that the market must always have the pivot on top. Sometimes the pivot can be at the bottom. In this case, it is. But because it's pivot, right, that means it's a very strong support. You see that market come down below OP, but then the diamond came in and straight away with the power of the pivots, the market just basically went up again. Can you see that? And I told you guys many times that the standard deviation between the market of +1 and -1 is actually 80 to 85%. I said this multiple times. So it's really no-brainer that you can buy above OP and aim at KTR +1 to take profit. Now, of course, some of you will say, Kel, how come I trade with you? I buy here, the market never go here, and then after that come down, I get thrown off, I get angry. Guys, I'm not here to able to dictate to you when the market will go KTR +1, but I know that mathematically it's like 80 to 85% it will go there. So if the market basically says this, okay, now I push it, then I'm not happy, I bring it down again. I mean, listen, I cannot help it, my friends. I cannot help it, right? Then market ready again, it goes again, and this time round trigger. So there's a lot of people who bought here, and even buy here, and then they were expecting to see profit. Then the next one, the market go down. Then they say that, oh, Cal, you know, the system is not good enough. Cal, I'm unlucky. Cal, I don't know trade. Dear all, this Dow Jones is not only for us. No, the whole world is seeing this. Whole world, entire world. So the entire world see the same thing, but the market failed to go to KTR plus one. It's very normal because it's just part of standard deviation. But when the market pulls back down, you notice the diamonds were all there, right? And you notice something very interesting. The KCX are all there also, right? So everything is about KCX, right? When the market's bullish. So you must go in again to buy. Kel, I don't want. I lose money already. I don't trade anymore. Okay, that I can't help it, guys. I can't help it if you don't want. Okay. All right, let me continue. So what happened now after that? You can see the market start to swing, swing, swing. Then this time now it tested the KTR minus one. Yes, it was not difficult. The market basically came down. You can see perfectly testing the pivot, and then after that rebounded and come back down again with a diamond. And it's a RDS reverse diamond. So you put it there. Straight away you can see it's a sell. And when you sell down, you see it sell exactly to the pivot. And then within the next 20 minutes, it went on a KTR minus one already. Okay, so that is how you should be trading. Hell, I'm not around to see this. I understand. I understand. So that's why we need to come together to work together. All right, one single person not able to see everything, right? Okay, then after that, the market tries, cannot be above OP, breaks again, pivot. Now this is bad. OP is here, pivot one is here. That means it's below OP, below pivot one, and it's triggered pivot one, so become a resistant, right? And the market just sell down all the way to KTR minus 3 later. Okay, so all clear. This is the Dow Jones. All clear. Press number 9 right now. Okay, so moving on, you can see this is the Dow Jones chart, right? You can see there's a lot of failed diamond RDS trades. Okay, now RDS trade means that the market is supposed to go up but didn't go up. Then what happened? How can you counter it? Now, first thing first, I already told you guys that when the market is below OP, right, don't buy lah. I already say this multiple times. Right, but still got people to buy. Then that's the problem here. If you buy, of course, you must take the hit if the market is bearish. So what happened is that there are some people who bought here because it's above OP, that's fine. But when the market goes below OP, you know something is wrong. And the market goes below the line, confirm wrong. And the market is below pivot one, oh dear, that's very wrong. And you still hold the buy all the way down. Then, of course, very, very, very wrong already. Okay? All right, so that is something that you must remember that you don't fight. So there's another here, there's another white line here with a draw. So the market actually stabilized on it. So another student asked me, Cal, can buy here or not? I say, if you want to buy on diamond, no problem. But do not, it's below OP. The market generally is not good. And there's something here called MLP. MLP is resisting it also, so just be careful. So when the market goes below the MLP, below the white line, oh dear, that's finished, right? And then market quickly sell down to KTR minus 3. And this student basically asked me, Kel, can we buy it from bottom now? I said, huh? What's the reason? He said, too low already, lor. Then it's out of the context of the stitching, right? So how can I tell you all this? So that means I cannot tell you anything else outside than the crazy system. All clear? All right, so the next one is the gold market. I know you guys are really crazy on gold. Let's do gold now. Now, yesterday, gold, someone feedback to me, Kel. Yesterday, above OP was a buy, right? Yes. But because your KSI is red, I didn't buy. Wow. My friends, above OP is a buy already. You don't need to ask me. Okay, if any of my seniors say because it's OP and KSI rate cannot buy, right, I'll strangle the person. Okay, you cannot say that. It's just that the trading volume, the size gets small, reduce a bit because the KSI is red. That's all. You don't change my words. And of course, the next thing is that I did mention to you the opening price and the pivot one is very near yesterday. So if the market goes above OP and pivot one, it's called classic trade. You can buy gold. You can. And because there is a down candle, right? I said if the market goes up, it will cover the down candle first. And truly, it performed that. So all these, please do not misuse my words. I'm saying that above OP, you should buy. If the KSI is red, then just go smaller. Okay, if the pivot is supporting you, you're back to normal. So let's look at the gold market here. It went sideways, 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 toggling the pivot several times. That shows the pivot, how strong it is. Toggle, toggle, toggle for a really long time. And of course, I told you guys in the morning, if you can, don't trade. But still people want to trade, then of course, you just have to pay the price. Okay? So the thing is this, one thing to note, everybody now, I'll show you a very neat trick here. It's a PTP trick. See, everybody now do me a favor, look at the left side of the screen, okay? Take your finger, your index finger in your thumb, and then you just touch the body of the candle. Touch the body. That means take your index finger and your thumb, measure the body distance, all right? Or something like this. Then you double it on the closing price of the yellow candle. Let me take this and you double it onto the closing price of the yellow candle. So what do you see? If you've done that properly, you will actually land at KTR plus 3. Can you see that? Can you try that? Have you tried this? If you have tried it, put the word tried. Right, take your index finger and your thumb, put at the body, not the high, not the low, but the body of the yellow candle that I'm drawing on the left side. And then after that, you just shift it you just hold it and shift it up to the closing price of the yellow candle. You will notice that the market actually landed somewhere near the KTR plus 3 area. Okay, so this is actually something that we actually do in PTP. This is called a big one bar action. All right, and of course, you can see that the market really performed. So why do we have this sort of thing here? Because for a market to in 5 minutes bump up so high and so much, it takes a lot of fun. So usually what happened, okay, what happened is this, okay? After it happened, right, usually there'll be pullback. That's very normal. But if the market can stay above the 50% mark of the entire candle, it will become a support level. And because of that, right, once it cross above it, right, it will usually go back to one time of the body length itself. Now, this is not 100%, but when I saw it, I know that gold will be going up. Then, but the thing is that as I was more taking cautious of the wind, I take profit at 2879, in face of KTR minus plus 2, and I was just out. So by right, I should hold to 2890 lah, but never mind. Okay, so you got an idea now? So that's how it works yesterday. And of course, you can see on our screen, the market, right, basically went back up to test the MA. That's why there's a lot of green dots here. So by right, you're going to see like this or like this. In this case, the market chose the downside. Okay, all clear? All right, guys, so that will be how you should trade on the market. All right, so for gold trading, you can see as the market is below above OP, then you just have to draw the lines accordingly, and then you will have your trades regularly in the market. So every time when the market basically, if your diamond here, although the price is down, but please, guys, it's above OP, so be very careful. You're not short. And if the KSI turns green, then guys, you should know that the next thing is all to the buy side. So I do have periodically, I just short the market just to see where it go down. But once the market goes above the white line that is available on your screen from the diamond, just cut and flip to the long side because you're above OP. Okay, clear? All right, guys, that will be all for today's sharing session. I hope you enjoy this. All right, the videos, we'll try to bring it up ASAP. For those who haven't tried it, I only see Disha, Lee Chun, and Susan trying this. The rest of you didn't try? You're driving? All right, if not, then that'll be all for today. I will see you guys on the Telegram group chat. Bye-bye.